Looking for some good deals on some great stocks? Would you like to collect safe, growing, totally passive dividend income while you also set up your wealth to exponentially compound? Want to know my top 5 stocks for May 2022? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal 6-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. Compounding your wealth and your passive income at high rates over the long run is the game, and dividend growth investing is the name of that game. In my view, dividend growth investing is the only way to invest. I'll tell you why. High quality dividend growth stocks represent equity in world-class businesses that pay reliable rising dividends to their shareholders. They're able to do that because they're producing reliable rising profits. And they're able to produce reliable rising profits because they're providing the world with the products and or services it demands. It just makes sense. I mean, what would be the opposite of dividend growth investing? Well, that would be investing in low quality businesses that don't produce any profits at all and can't pay any dividends. You obviously don't want to do that. I've been a dividend growth investor for more than a decade now. This strategy was crucial to my ability to go from below broke at age 27 to financially free at 33. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. As great as high quality dividend growth stocks can be though, not all dividend growth stocks are great buys at all times. Focusing on the very best long-term opportunities right now is what this video is all about. Today, I want to tell you my top 5 dividend growth stocks for May 2022. Ready? Let's dig in. My first dividend growth stock pick for May 2022 is Domino's Pizza Inc., stock ticker DPZ. Domino's is a multinational pizza restaurant chain. I love pizza. I love making money. Why not combine the two? Well, Domino's gives you the chance to do just that. It's the largest pizza company in the world. Domino's offers a simple to understand business model selling a timeless food staple. You might think that successful long-term investing must be more complicated than that. Not really. This is a company that has compounded its revenue at 11.1% annually and its earnings per share at 24.3% annually over the last decade. If every business I invested in grew like that, I'd be a very, very happy investor. As you might imagine, outstanding business growth has led to outstanding dividend growth. Domino's has increased its dividend for 10 consecutive years. This relatively short track record is off to a booming start. Their 5-year dividend growth rate is 19.9%. Even their most recent dividend increase came in at 17%. Now the stock only yields 1.2%. This is more of a compounder than an income play, but with a payout ratio of only 32.5%, I suspect that Domino's will continue to increase its dividend at a high rate for many years to come. This stock looks modestly undervalued after a 33% drop from its 52-week high. We'll be featuring Domino's in an upcoming full analysis and valuation video, which will highlight the appeal of this name after a stunning 30% drop year to date. So keep an eye out for that video. Let me be clear though, this isn't the kind of stock you buy at 65 years old with the intention of getting income out of it today. But if you're a younger investor who can let this business grow for you over the next few decades, it can do remarkable things. This is a stock that's up nearly 1,000% over the last 10 years alone, and I think there's a lot of juice left in this rocket. My second dividend growth stock pick for May 2022 is Fifth Third Bancorp, stock ticker FITB. Fifth Third is a diversified regional bank holding company. The banking business model is one of the oldest business models in the world. There are reasons why it's been so enduring, and much of what has created this legendary level of endurance remains. Banks don't grow at super high rates. Instead, it's just this steady plodding along that really adds up over time. In Fifth Third's case, we're talking about a 2.5% compound annual growth rate for revenue and a strong 9.4% compound annual growth rate for EPS over the last decade. Strong bottom line growth, but even better dividend growth. Indeed, Fifth Third has increased its dividend for 11 consecutive years. Their 10-year dividend growth rate is 14.8%, which is actually pretty fantastic. And even though that does exceed earnings per share growth over that same time frame by a good margin, the payout ratio is still only at 32.2%, so they could expand the payout ratio even further. You also get a 3.1% yield layered on top of that double-digit dividend growth, providing dividend growth investors a nice combination of yield and growth here. Looking for a good deal on a great stock? Well, here you go. The business is selling for less than $39 a share. I think it's worth over $47 a share, and our recent full analysis and valuation video on Fifth Third explains why. Is Fifth Third the kind of business I'd want to bet the whole farm on? No, but this is a great regional bank offering a market-beating dividend growing at a double-digit rate, and it looks downright cheap right now. It's tough to complain about any of that. My third dividend growth stock pick for May 2022 is Huntington Ingalls Industries Inc., stock ticker HII. Huntington Ingalls is a major American defense company. What do we know about defense companies in 2022? Their stocks are going gangbusters. Two big reasons for that. First, these stocks came into the year super cheap. They were due for a rebound anyway. The second reason, the more obvious reason, is war is breaking out in Eastern Europe after Russia invaded Ukraine. But Huntington Ingalls has been doing very, very well over the last 10 years, even without any major war propelling results. Their compound annual growth rate for revenue is only 4% over that time frame. However, earnings per share has compounded at 24.8% annually over the last decade. This is an under-the-radar dividend growth gem. The company has increased its dividend for 10 consecutive years, and I'm extremely confident that this is just the start. The 5-year dividend growth rate is 20%. Yes, 20%, that's without war. Just imagine what increased spending on defense can do. The stock also yields a respectable 2.1%, which does beat the market, and the payout ratio is at only 28.3%. So this dividend has tons of room to head way higher. This stock is up 20% year to date, but it started out really cheap. I think there's more room to run. I highlighted Huntington Ingalls back in early January as an undervalued dividend growth stock to consider for long-term investment. In that video, one thing might really pop out at you. It's this: Huntington Ingalls has a backlog that was, at that time, more than 6 times the company's entire market cap. I estimated fair value for the business to be almost $230 a share. Shares are currently trading hands for about $222 each. So even after a run, it still looks at least slightly undervalued. And I'd argue I was being cautious with the valuation. The whole defense space has gone nuts this year, but this is one defense stock that still looks attractively valued. Take a look if you haven't already. My fourth dividend growth stock pick for May 2022 is JPMorgan Chase Co, stock ticker JPM. JPMorgan Chase is a financial holding company that operates as one of the largest financial institutions in the United States. 2 banks on the list today? Yep, that's for 3 reasons. First, it's just a great business model. It's literally in the business of money. Second, earnings season is upon us, and banks have shown up with some solid results. Third, despite those solid results, the bank stocks have recently cratered. When you have a combination of strong business results and weak stock results, that can add up to excellent long-term investment opportunities. Keep in mind, this bank has grown its revenue at a compound annual rate of 2.6% and its earnings per share at a compound annual rate of 12.8% over the last 10 years. Nothing weak about that. If you believe in the future of the US, you should believe in the future of this bank and its dividend. JPMorgan Chase is symbiotic with the US. It's a critical part of the US financial infrastructure. I'd argue that this bank may as well be the avatar of the US financial system at this point. They've increased their dividend for 11 consecutive years with a 10-year dividend growth rate of 16.5%. And even with all of that double-digit dividend growth, the payout ratio remains a low 26%. Plus, the stock offers a market-beating 3.2% yield on top of it. This stock is down 22% year to date, and I think it is seriously undervalued. We put out a full analysis and valuation video on the bank in mid-April showing why shares could be worth $156.56 each. With the stock currently priced at about $127, the stock looks 23% undervalued right now. There's a lot of potential upside here on a world-class bank that should continue to prosper as long as the US prospers. I think long-term dividend growth investors could do a lot worse than picking up shares in JPMorgan Chase when they're priced at less than $130 each. My fifth dividend growth stock pick for May 2022 is Magna International Inc., stock ticker MGA. Magna is a multinational mobility solutions and technology company. Magna is mega big, mega successful. They work with pretty much every major auto manufacturer in the world producing a range of components for their cars. And as mobility becomes more important and more complex, Magna becomes an even more in-demand partner. Magna's growth has been a bit lumpy, largely due to the way in which the pandemic has impacted the business. Still, they put up a 1.8% compound annual growth rate for revenue and 5.7% compound annual growth rate for earnings per share over the last decade. But if you back things up to before the pandemic hit, Magna generated a compound annual growth rate of over 14% for earnings per share for the 5-year period between fiscal year 2012 and fiscal year 2016. But what is not lumpy? Their dividend growth. The company has increased its dividend for 13 consecutive years. The 10-year dividend growth rate is 13.2%, which is great. Plus, the stock even offers a 2.9% yield. It's hard to go wrong with a near 3% yield being paired with a double-digit dividend growth rate. And the payout ratio of only 36% shows a well-covered dividend, even with the company not firing on all cylinders right now. When the numbers bounce back, the payout ratio will likely fall and the dividends coverage will look even better. This stock is down 25% year to date. To my eye, it now looks significantly undervalued. We're putting the finishing touches on a full analysis and valuation video on this business. In that video, you'll see that my estimate of intrinsic value on Magna comes out to over $80 a share. Shares are currently trading hands for about $62 each. This stock looks like it's more than 30% undervalued. It might be one of the most undervalued stocks in the entire market. I'd recommend to take a close look at Magna. This stock should be on your radar, if not in your portfolio. Thanks so much for watching. Hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about my top 5 dividend growth stocks for May 2022. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.